So you have a variable rate mortgage, but you're not sure if you should lock into a fixed rate or not. Maybe you foresee some interest rate hikes coming in the near future, and you're just generally concerned about your interest rate rising. Well, I'm going to go over your different options and kind of give you an idea of whether you should or shouldn't lock into that fixed rate. Welcome back, my friends. It's Tom here from Moffett Mortgages. Thank you again for tuning in. As always, please feel free to like the video down below and hit that shiny subscribe button. Hit that notification bell. That way you don't miss videos like this in the future. First things first, if you haven't checked out my video going over variable rate mortgages, be sure to do that as I lay down the foundation and the basics of how variable rate mortgages work. That way, once you do check out that video, you can come back here and you'll have a good foundation and good knowledge of how variable rate mortgages work. Okay, so let's dive into it. When should you lock in your variable rate mortgage? Number one, if you're overly stressed about the fluctuations in your mortgage, then it's definitely time to lock into a fixed rate. The last thing you want to be is super stressed about your mortgage. So I generally recommend anyone that's stressed over the fluctuations, just lock into a fix. It's just going to save you the stress over time. However, before doing so, I definitely reach out to a professional who can tell you the pros and cons of locking into a fixed rate, because it is important to understand the cons when it comes to locking into that fixed rate. Also, you need to ask yourself, when you are about to lock into a fixed rate, and let's say that lender's offering you a 2.8% on your rate, well, compare that to your variable rate. Let's say your variable rate is 1.7. You need to gauge that spread in between the variable and what they're offering for the fixed. If it's a pretty big spread there, definitely ask yourself, how many times does the Bank of Canada need to increase the prime rate in order for me to reach that 2.8% fixed rate? History also shows that over the last 12 years, the Bank of Canada has only risen interest rates 5 times. So if you look at that and you know that they're increasing interest rates by 0.25%, well, that's not going to add up to a whole lot, and that's also over 12 years. So moving on to number 2 on when you should consider locking into a fixed rate mortgage is if that fixed rate is on par with the variable rate at the time. Now, I'm not saying if the fixed rate ends up coming back down to where variable is today, lock in right away. I'm not saying that. I'm saying if you are someone that is still very stressed about the fluctuations and that fixed rate comes down to variable, well, then that would be a good time for you to lock into a fixed rate. However, like I've said before, you do need to go over the cons of fixed rates, such as the mortgage penalty, which I've discussed in numerous other videos. So you do have to go over that before you lock that in. Now, reason number 3, if rates go up, can you afford it? Now, this one's a bit tough to gauge because let's say you have that variable rate mortgage and you have a couple increases from the Bank of Canada. Well, if you're wanting to lock into a fixed rate, that fixed rate is likely going to be higher than your variable rate. So it might not make sense to do it anyways, because if you are locking into that fixed rate, you're likely going to have a higher mortgage payment when you do that. But with that being said, maybe the fixed rate is on par with the variable rate. Let's just look at what a 0.25% increment can do to your mortgage payment. So like I've mentioned, when the Bank of Canada increases its overnight lending rate, usually it's by 0.25% increments. So let's take a look at what that does to your monthly payment. Now, I'm using monthly payments here as an example. It's just easier to show the numbers. So if you are someone that has weekly or bi-weekly, obviously if you have bi-weekly, just divide the payment by 2. If you have weekly, divide it by 4. So let's go over the monthly payment increases on a 25-year amortization. So if you have a 25-year amortization and the Bank of Canada increases the overnight lending rate by 0.25%, that is going to increase your monthly payment by $61. If you have a 30-year amortization, that's going to equate to a $48 per month increase. So with all that being said, just take a look at those numbers and just ask yourself, can I afford those increases? Maybe you're in a variable rate mortgage right now and nothing's increasing, but you look at those numbers and you think, well, $60 a month, that is kind of pricey. Maybe I will go with the fixed rate. Then of course you have your answer. Okay, so now that we've had our 3 different considerations to think about when it comes to locking into a fixed rate, let's go over the process of locking into a fixed rate mortgage. So the first thing you're going to want to do is contact your lender directly. And when you do contact them, you're going to want to ask for a lock-in offer in writing. And that's very important. You want it in writing when you ask for that. Once you get that offer in writing, then if you're with me, if you use me as a mortgage broker, come to me. I'm going to review it and I'm going to see if there's options that are better than that. Or if you're with another mortgage broker or you want to shop around at banks, do the same process, see if there's better options, and then go from there. And it's very important that you do go to your mortgage broker. I'm not saying banks specifically here because I want you to go to someone that is a professional and they know what they're doing, whether it's myself or another mortgage broker. Make sure they're asking the right questions because it's important that you do shop around with different lenders, because if you want to lock into a fixed rate, some lenders are better than others when it comes to locking into that fixed rate. You don't want to go with a lender that's going to have a huge absurd penalty if you do break that mortgage in the future. Now, those of you who have been watching my videos, you do know that I am very pro variable. So let's go over some considerations to sticking with variable. Number one, your future. You want to make sure that you're set up for the future in the sense that it's the right rate for you. If you're a real estate investor, you definitely want to consider not locking into a fixed rate. A lot of real estate investors go the variable route because they want the ability to restructure their mortgages whenever they want. You don't want to have the issue of, let's say you want to tap into your equity or extend your amortization in order to purchase another property. You don't want that fixed rate penalty. That also goes with saying if you are someone that is looking to move within the next 5 years, then you definitely don't want to go with fixed, because to break that mortgage, you're definitely going to be paying a way higher penalty than what you would have paid with your variable rate mortgage. Number two, banks want you to lock into a fixed rate. That's right, they do want you to lock into a fixed rate because they get more money when you lock into a fixed rate. The reason being is, like I've mentioned in a lot of videos, my pet peeve is mortgage penalties. When you break a fixed rate mortgage, you are paying the bank a lot of money. That's how they make their money. Also, when you lock into a fixed rate, you're paying a premium right off the bat because you're paying a higher rate than what the variable rate is at the time. And coming in at number three, static payments. If you are someone that is just still super stressed about your payment fluctuating, well, if you want the benefits of a variable rate, but also the benefits of a static payment, there are options for you. There's actually a couple lenders that do offer a static variable rate. It's exactly how it sounds. Your variable rate mortgage, the payment itself doesn't fluctuate as the prime rate fluctuates. So what happens is your amortization is the one thing that does fluctuate. So there are pros and cons to the static payment, but that's where you do need to seek some advice from someone that knows what they're doing and they do know the pros and cons towards a static payment and an adjustable payment. So when it comes to locking into fixed rates, there's a lot of different things to consider, all the things we've gone through. It does come down to personal preference. And if you were to ask me, a mortgage broker, or ask any mortgage broker for that matter, 90% of them will tell you they will be sticking with their variable rate mortgage and riding the wave. That's because a lot of mortgage brokers are pro variable because we have seen the ugly mortgage penalties from our clients in the past. So that's just something to consider. However, it does come down to your personal preference. So I hope this video helped, and I'll see you guys on the next one.